Okay, this is problem 3-7 in your book. Here we have Bailey Corporation's financial statements, and I have the balance sheet on here, and also have the income statement. If you'll remember, the balance sheet is a snapshot in time, income statement is over a period of time. Okay, the first question asks, what was the net working capital for 2007-2008? So the formula for the net working capital equals total current assets minus accounts payable plus accruals. So for our net working capital for 07, we can look at our formula here. It's F9, that's our total current assets, minus our accounts payable plus our accruals. So let's find our net working capital for 08. We write our formula, we'll say equals our total current assets, right here, minus our accounts payable plus accruals. And hit enter. And so that's our net working capital for 08. Okay, next question asks is what was Bailey's 2008 free cash flow? So free cash flow equals EBIT times 1 minus the tax rate plus depreciation minus capital expenditures minus change in net working capital. So one thing we need to remember is to arrive at our capital expenditures, we add depreciation to the change in net fixed assets. So to find our capital expenditures, we'd say our depreciation and amortization plus our change in our net fixed assets, which would be our net plant and equipment here, the change in 50,000 and 47,000 to get 8,000. So let's find our free cash flow. We'll start with a formula. It's our EBIT, which is, here's our EBIT, times, and 1 minus tax rate, we'll see our tax rate is 40%. So we can say 1 minus 0.4 plus our depreciation, which is right here, depreciation and amortization, minus our capital expenditures, minus our change in our net working capital. So we need the change here, the difference of these two. So we just say minus net working capital 08 minus net working capital 07. We get our free cash flow of 10,675. So now the next part of the question says to construct the statement of stockholders' equity. Here I've started it for us. We have 5,000 shares of common stock, and the amount it's worth is $50,000. Our retained earnings was $20,850, and all we have to do is add these two together to get our total stockholders' equity. Now let's finish it out. Our 2008 net income is right here, the net income here. So equals net income. Our 2008 dividends are right here, and they're going to have to be subtracted out because they go to the shareholder. So we'll put a minus in front of them. And then we have our retained earnings. Our retained earnings come out of our net income, net income, dividends, and retained earnings come out of net income. So that the retained earnings would be the difference. So equals plus, this is a minus, so it equals 1,175. Our balance is sum. Is the sum, and to find a sum, you just come up here and click this little FX that gives us our formulas. we want to do a sum formula. And so we're going to sum up these three balance at the end of the year net income and cash dividends. And then we'll click OK. So our sum is $32,025. We just carry over our stockholder our retained earnings. And we total up our balance would be the sum of our previous year plus our retained earnings. So there we go. Now let's make it look a little nicer. Let's put an underline. And here we'll put double underlines. And there we go. There's your statement of stockholders' equity. Or we can also pull these down. See how that looks. And there we go.